Hey everyone, welcome to the Guiding You Forward podcast, where we talk about all things financial related. And today we're going to talk about investment strategies with Chad Wattups. Welcome, Chad.
Thank you. Happy to be here.
What effect really has COVID-19 had on our economy?
Yeah, so the stock market, if you think about what creates value in the stock market, it's made up of a lot of different companies, the values those companies provide, and that value is based on the earnings potential of that company. So the future earnings typically.
Yeah.
And so a company that sells whatever widget A, B, or C they sell, if they can't sell them because you and I and most of America is staying home, our economy is driven, 70% of our economy is consumers. It's you and me going out and spending and buying. And if that's not happening, the ability for that company in the stock market to produce revenue and have their stock price increase is limited. So that's why stock prices drop in times like this, because they're just not able to make money. So there's certainly an impact to the market, which we feel through our IRAs and 401ks.
And so really, we need to be out spending money, right? For the stock market to grow and be awesome.
That's certainly a big part of it, with 70% being tied to the consumer. And that's the challenging part of this, right? Is people don't feel comfortable doing that because they don't feel safe, or they want to save more of their money.
Yeah.
But those times will return, no question, when we're a little more comfortable getting out. And I don't know about you, but I've spent a fair amount of money on Amazon that's replaced what I would have purchased in the store. So there's still options to do that. And some companies actually fare much better in this environment. Amazon, Target, Walmart, some of those online retailers have done very, very well. Certainly companies like Zoom that provide video conferencing.
Absolutely.
They've done great. So you can also be a little strategic about where you put your money, both in good and bad times. There are certain industries, certain locations that are better places for your money.
Okay. So let's say I'm looking forward a little bit, right? Right now, we're still in the midst of COVID-19 and this pandemic, although, some things are lifting, so to speak. And let's say I had a pay cut, but I'm getting this money back now. Maybe I pulled from my emergency fund. What, now that we're coming back into more this certain times, right? We're not quite as uncertain. Maybe we're spending a little bit more. What's my best next step?
It goes back to your personal situation, number one. But if you have a good plan in place, I would strongly encourage that you keep that plan in place. Continue to try to invest. And keep in mind that, investing in volatile times, there's a benefit to that, because you're buying on a regular basis. Whether the market's low or the market's high, you're buying in. Over time, that benefits you because you've purchased many of those times at lower cost. So if you have the ability to put some of that money away for the future, that's a good strategy. Setting aside enough to create the emergency savings is critical. You want to make sure that you're comfortable, you're financially secure enough that another hiccup down the road doesn't completely destroy your financial picture, that it gives you some stability.
What additional products, services, what else do we need to be thinking about aside from those things?
Yeah, aside from the bigger objective of saving for our future, this environment creates some opportunities as well. Interest rates have dropped, as you know.
Yeah.
So some good strategies are, check with your financial institution to see, is there an option to skip a payment perhaps, especially if you're in a situation where you've been laid off or furloughed, or your pay's been cut back a little bit. There may be an option for you to do that. With the low interest rates as well, it may be a good opportunity to refinance, to reconsider consolidation of debts that you might have. Any of those types of activities can help you save interest, can help you save your monthly budget can be improved, your cash flow can be improved.
From what I've learned from you today, Chad, it's really managing our money in uncertain times shouldn't be all that different than managing our money in regular times.
No, it really shouldn't be. I mean, we have to make slight adjustments, but it also comes down to your personal situation. And we kind of put members that we talk to into three categories, and we put ourselves into these categories, right? You've got these younger years where, if you're in that situation, you're 25 to 40, 45, you probably don't need to make dramatic changes when things like this happen, because you have time on your side, you've got a long-term plan. If you've got a savings plan in place, if you've got good life insurance, those are some critical things at that point in your life. Starting a family, those things are critical. As you get into the middle years, 45 to 65, that's a place where you might need to make some small changes to your plan in a time like this, because you are getting closer to retirement. And you do need to understand more of those principles of retirement. And if all of your money is tied up in the market when it's volatile like this, not only can that be risky towards your overall balance in your portfolio, but it can also be, it messes with your head, right? Maybe you're not sleeping at night. Maybe you're not comfortable with just the idea of the volatility, even though you may have enough time on your hands. So you start thinking about it a little bit more at that time. And that's also the time when you want to start really looking at things like, pension planning, the income planning, strategizing around what retirement might look like. And then the later years, once you're 60 plus, 65 plus, in a scenario like this, like with COVID-19, that's the group that probably wants to look a little more closely. Not that you have to make changes, but look a little more closely and just make sure my plan is really doing what it should do. Now, if you've built a good plan, there's still likely no reason to make dramatic changes, but it's more important that you're looking at your plan more frequently as you get older. When you're 20 or 30, you can just let that kind of ride. You've got time on your side.
Yeah.
Check your accounts annually, make sure the plan is still right for you, but you don't have to worry about it on a daily, weekly, monthly basis. You can just be confident that it's working for you. When you get closer to retirement age, you have to put a little bit more time into assessing it, meeting with an advisor on a more regular basis, making sure your income plan and your insurance plan is all in place.